Okay, we start with the next session. It's a panel discussion on how to increase trust in the use of digital financial services. And we have with us on this panel Nishant Kumar, co-founder of Lakshya, Rafe Mazer, who's the Director, Consumer Protection Initiative, Innovations for Poverty Action, and Mr. Srinivas Rao, who's the Director, Digital and Emerging Payments, AWS Payments. And the session will be moderated by Beni, Chugh, a research manager at Dvara Research. May I request all of you to please come on stage, please. Thank you. Beni can take over from here.
Am I audible at the back? I've been told one good advantage of a small room is people get to talk. So please stop us, please ask us questions, because that's how we can make the most of the few numbers that we have here. I'm Beni Chugh. I head the digital finance practice at Dvara Research. Dvara Research is a not-for-profit, non-partisan think tank working on issues of financial inclusion and social protection. It's quite interesting for us. This panel has been top of mind for the organization for a few years now. Back in 2017, we found that, on a field study, we found that one instance of frauds in digital payments dissuaded users from not just digital payments, but also formal finance. This year's Global Fintech tells us that one of the leading reasons why Indians do not use bank accounts is because they do not have trust in the institution. What we also found on the field more recently was people are not able to distinguish between genuine KYC requests and disingenuous ones. What that means is they would never, at least the people we spoke to, would never try eKYC online. They would much rather go to a bank branch and undertake their KYC processes. More recently, some observers of digital payments industry tell us that for all of us, for those of us for whom the first digital payment transaction is actually a failure, 75% of us do not return to digital payments for at least the next 1 year. Looking at all of this data together, there seems that there is one hurdle that we need to cross when it comes to adoption and sustained usage of digital finance, and that seems to be the hurdle of customer trust. How do we become more trustworthy as providers of digital finance, as stakeholders invested in digital financial inclusion, in responsible digital financial inclusion? And to unpack some of these questions, I have with me a stellar panel. I'll quickly hand out to Nishant to introduce himself, and we can take it from there.
Thank you, Beni. And thanks, GFF, for this wonderful opportunity. Everyone I know on the fintech world is here, or about to be here, right? So, my name is Nishant, and I'm the co-founder of Lakshya. We provide, we are a fintech. We work with the informal segment, providing them macro savings and micro insurance products. Typically, our customers include farmers, artisans group, weavers, communities, gig workers, auto drivers, and all. It's a very interesting phase where, for the first time, perhaps we will be able to reach out to them with suitable financial products at a cost which allow us to serve them better. And we have been able to do it because there is a digitization of the whole process. But as we will discuss in this panel, it's the journey we have just begun. Because one of the key elements which we still have to sort of crack is how we build the digital trust when we reach out to these low and moderate income segments and provide them better and suitable financial products. Thanks.
Thank you, Beni. My name is Srinivas, and I'm from Amazon. My background is mostly outside of India, so I'm hoping that is something that we can talk about that brings this discussion to bear. I've been with Amazon for a long time. This is my 17th year, and I worked in both US. I was part of the payments team here in India from 2011 to 2016. And now I currently manage payments for multiple emerging countries in Asia, Middle East, and Latin America. And what I see here, obviously, first of all, this whole conference is amazing, just in terms of how big it is and how many people are here. And as Nishant said, I ran into a few people that I knew 6 years ago who said, "Oh, you're here." It's like, so it's also a good place to connect. But other than the networking part, I think that the topic today is also very, very important in terms of how to drive adoption across consumers. And some of the challenges, some of the questions that you may have also apply to other parts of the world. And I think there's something for me to learn and hopefully to share that can help this whole discussion. Thank you.
Thanks, Beni. My name is Sugandh, and I represent Fintech Association for Consumer Empowerment. It's a newish association amongst the youngest, I guess. You can call it a startup association if that resonates well for you. So we are a Fintech association for Fintech lenders. So this is our focus. So most of our members are Fintech companies which have their NBFCs or web aggregators. And collectively, they represent more than half of the market in India. So in terms of volume, it's very sizable. We work in the area of policy advocacy, SRO, sort of self-regulation, and also knowledge and research, with the idea that digital lending ecosystem has to work for everybody, bringing value, but above all for the customer, because eventually there's no point of all this song and dance that we are seeing if it does not benefit the customer that we want to serve. And I think our core agenda is really to ensure that whatever we are doing should work for the customer. So that's our mandate. I'll pause here and really look forward to these interactions. And thank you all for coming for this session.
Okay, thanks everybody. Sugandh, since I have you, we've been trying to understand who are the people who use digital finance, and I know you can speak to a little bit about digital lending, but what is the average customer? What are the average customer protection concerns that are coming up in digital lending?
So I'm also new to this, this base of, I was very equally intrigued by this problem, that who is this customer who goes on the app and take loan for 2,000 rupees and 10,000 rupees. And we tried to scratch this problem because we really wanted to understand this whole digital journey, which is so anonymized, but who is this customer who is actually coming? And we are talking about millions of customers. Our members themselves last quarter itself disbursed close to 10 million loans. So who are these customers? So we did, we scrubbed the data from the credit bureau and also from our members. So if I have to do a caricature, not funny caricature, but just a caricature, is a very young customer. 70% of the times it would be less than 35 years of age. So this is a typical 18 to 35 years where the customer is. Mostly male, unfortunately or fortunately, 90% of these customers are male who are taking loans. Third distinct element of them is they are also very educated. So, 2/3 in our sample or in our customer segment we saw were graduates and more. So it's very, upmarket, urban customer base that we are serving to. And they're also, in terms of salaried and unsalaried, it's a mixed bag. So I think both kind of people are there. So that's a, sort of physical or the demographic phase. And obviously these are more urban customer, perhaps more in the west of India and south of India, and less so in east and south. This is how we see at the market right now. But if you see, they are very tech savvy, they're comfortable with the technology, but they're also very new to credit, right? So 1/3 of the customers are taking their first loan not from a financial services formal provider, but through an app, which means that they perhaps don't know the discipline which is required for the credit. A lot of these are, even if they are not new to customer, they are still very new to credit also. You know, they are taking first or second loan very early on their journey, so that makes them vulnerable. And if you look at income-wise, they are actually 60% or so are less than 3 lakh, right? So they are earning less than 25,000 rupees a month, which essentially means that overall they remain, vulnerable to the income shocks, and they remain. But they also come with a lot of aspirations, right? So they want to buy things, they want to deal with, shocks that is coming. So it's a very fascinating story going on if you think about that person, which is, say, 30-year-old, lot of needs in terms of what the credit needs are, but also a lot of things to deal with in terms of emergency. And if I have to go a little more beyond, and why are they taking loan, right? Okay, this is the customer, but why are they taking loan for? And our survey showed that most of the time it's because of the emergency and medical reasons. And another big use case was actually education. And it's, if you think about it, it's very intuitive, right? If you look at the cost of education in India right now, or health, or emergency, is very, very high. And how does one really fund this kind of emergency? There's no alternative. I mean, no bank will give loan for, if I have to do a emergency procedure in a day, right? Nobody will give me. So where do I go? Perhaps earlier people were going to family and friends. That was the only alternative available, or to so-called money lender. But now I think there is a formal way of meeting those credit needs, which are very, very important. I know consumer lending is often associated very negatively, but actually these are very genuine credit needs which are being full. And customer is exercising that choice because, one, it gives them very dignified way of taking the credit without compromising on their privacy, without telling the whole world no, that they are so vulnerable that they can't fund their personal needs. So that is very important for the customer. And then I think digital lenders have done a great job in reaching out to this unmet demand of the credit, which was obviously not fulfilled at this point. So this is how I would see the typical customer segment. Of course, within that, there are a lot of variation. I can also use fintech kind of a thing, which is just for the convenience sake, but there are a lot of people who need it for the very genuine needs. So, yeah.
Thanks, Sugandh. I'm going to put a pin in the whole privacy aspect of it, and I'm going to come back to you in a while. But this is very interesting, Nishant, that one of Sugandh's use cases is actually funding for health issues, while you, on the other hand, have been trying to create a market and appetite for insurance, for saving culture, and your experience has been, let's say, slightly different from what Sugandh's is. So can we go into what are the behavioral or even perceived challenges that people face in accessing digital savings, digital insurance? What has your experience been like?
So, in general, forget about the digital piece. In general, savings and insurance is hard. On the market, on the understanding from the customer side, from the seller side, building out for this segment, it's hard. Even if we don't consider the digital channel as a medium to reach out to them. What digital does is it adds to the complexity of it, because we don't yet understand how customers are interacting with that digital platform. Okay, when you remove the person who was perhaps interacting with him before in order to sort out the issues or in order to make him understand the product, and now you expect him to understand a fairly complex product where he has to he has to have the trust. Because unlike credit, the point of consumption for insurance and savings is not at the point of purchase. It will be delayed after 3 months or 6 months or 1 year down the line. And in case of insurance, there might not be any benefit for him at the end of the year, right? So how will you convince him? But we have to look at more from an opportunity side of it also. As I said in my beginning introduction, that this is perhaps the first time we have the opportunity to reach out to them, provide them customized savings and insurance products, which basically means that it will be beneficial for that auto driver, which will be beneficial for that blue collar worker. The cash flow of an auto driver versus a blue collar worker is very different. In a traditional approach, this was never feasible, right? But me and my co-founder always discuss, trust is the common currency, which is lacking when we approach them digitally. The reason is that when we talk about the savings and insurance products, it has happened, but it still needs to be evolved when you are designing the product with a digital first approach. Okay, what we are doing today is we are sort of cutting it away, copy-pasting the traditional product designs, what we have been doing it traditionally, and maybe at the point of onboarding, we have made some APIs and calling it digital at the point of onboarding. But for savings and insurance to really pick up, you have to look at the whole product life cycle, okay? And it's very important for two reasons. It's not just about the communication piece. Of course, the communication needs to be simple. The way you are constructing the product, that needs to be simple. But more importantly, when the whole aspect of reaching out to the customer digitally, it's important that what mental models he is creating about the product is what you are delivering. Because at the end of the day, if he perceives that he has been cheated, not because the product was designed badly, but because he has perceived it in a very different manner, then the trust is broken, right? So that's point number one, how you design the product with a digital first approach. And it's difficult for the legacy companies who have been working on the traditional front to suddenly ask them to change their whole approach and make it completely digital, suitable especially for the low and moderate income segments, for whom the interaction with the digital platform is not as smooth as for perhaps for you and me. The second piece is in all of this, how you are creating a two-way feedback mechanism with the user. See, the technology has made it very simple. You can be bombarded with the SMS and the WhatsApp messages, but how many times customers are actually reaching out to you? Have you really built out a system where it can be a genuine two-way feedback, right? And I'm not saying that I have the answer for that, but I felt that it was very, very important that you don't interact with the customer at the point of sale and at the point of resale of the product. There has to be a constant interaction with the customers in order to take his feedback about your product, about your features, about whether your product is actually solving his requirements or not, what he is perceiving about the product, and what your product is actually delivering, right? So yeah, so I will just say that let's have a first on the savings and insurance front. Credit and payment has seen a 100x or maybe a 1000x growth, but unless we are able to build or fill this gap of digital trust, the growth on the savings and insurance side may be muted.
Sure. Thanks, Nishant. I think we'll come back to that nuance that exists between feedback and grievance redress, right? Like having a two-way communication, and how are some ways in which providers are actually doing this. I think Rafe's clip will speak to this, but Srinivas, quickly turning to you, I know where you sit, you have perhaps a more global perspective of, what are customer protection issues, what are the markers of trust, if any, in the global side of things. So quickly turning to you, what are some things that you're seeing in your work?
Thanks for the question. And I think, as the other speakers have said, so trust is kind of paramount when customers have to think about their personal information, their financial information, and I think that is the single most driver of how you can build an engagement with your customers in the future. From what I've seen at Amazon and across multiple countries and regions across the world, is we start with making sure that we first provide the confidence to the customer that their information is safe. So you start with that, where the customer says, I feel safe in saving my information, because then that leads to the next set of things that you can do with them later. So we take safety very seriously, and we want to make sure that the customer knows what information is stored and how is it going to be used. So we start with that. Other thing I see across the world is there needs to be transparency about offers, about products, and making it clear what the customer is signing up for. So you need to find opportunities to make it clear to the customer. And I do understand that the digital wave with the young customers and new customers is new, and sometimes people are just like clicking the button, not sure what they want to do. They just can get to the end of the process. But I think even in those, I think it needs to be very important to kind of share that information with the customers. The third thing I see is we need to make sure that the customer has the confidence that we have their back. So you need to make sure that there's a guarantee and the customer feels safe that if anything goes wrong, this company, this institution, this lender, this startup has good customer practices. And I think that's something that we take it very seriously to make sure that both from a safeguarding the customer, but also from protecting their experience. So there's no negative reaction after that. And I think you talked about like having like a closed loop system to see, are you looking at the customer feedback? And we talk about looking, we have this notion called voice of customer. So we look at what are the top 3 complaints that you heard this week, and what are you doing about it? So it becomes very important. And I think the final thing is we want to make sure that across the board, the products are accessible, which means you don't create this product set for a small group. You need to be inclusive. You need to be offering this for everyone who could qualify for it. So you also need to think about building trust in a way that people will say, yes, I can go and interact with this company because they're for me. So I think those are a few things that I think hopefully are universal in nature regardless of where you are.
Srinivas, one thing that you said really jumped out at me, which is assuring the customer that we've got your back, or guaranteeing the customer that we've got your back. What are some ways that you've been seeing providers do that in? How can providers really send across that message that, hey, we're here for you, and then follow through that promise?
Yeah, and so that's a great question, right? So I think providers have to think about how their business model also takes into account how to respond to customers who may have problems, complaints, and challenges. If your business model is all about trying to maximize the revenue that you have and not think about there may be cases that you may have to make a decision on behalf of a customer that may or may not be aligned with your profitability or a business model, that's why you need to keep in mind. So some ways you can do it is you could have at least we have a system called an A to C guarantee, which says, okay, if anything goes wrong with this transaction, we will solve it. And we would always look at the case, but we would make the decision in favor of the customer. But we should also tag that customer so that it doesn't end up creating an abuse pattern later, right? So again, having both the mechanisms to collect the data, act on the data, and make sure you have systems in place so you can protect yourself, but on behalf of the customer. So I think those are some things that companies can think about, having openness to also resolving issues on behalf of the customer.
I'm going to come back on that A to C guarantee in perhaps a couple of questions. But Sugandh, I know we spoke about this before the panel, that there is this whole aspect of customer delight, but perhaps it's not imagined through and through the customer journey. So what can providers really do? Where are the bottlenecks? And what are some measures that they can put in place to kind of foster trust and win trust? Or should I say earn trust? Sorry.
Yeah, so, I think trust is a very fascinating subject, right? I really like it when these old style words are, interspersed with this kind of conversation, and especially in the digital world. And But again, just like happiness is different for different people, right? Trust, what it means for me, it would be very different to somebody else. So when it comes to digital lenders, I think why they have been so successful is because the customer trust is also what their expectation is, right? So if they expect that I want money now and anytime, anywhere type of expectation from their entire life, then they trust a brand which is agile enough and responding to that need. Therefore, they trust fintech lenders perhaps more. Who wants to go to a bank where they think they would not be treated very well, they would waste time, and they don't know. So they need money now. So I think this is where I know convenience is, often most overused word to say that, and ease part of it. But I think for a lot of people that is very important ingredient or marker of trust, because I need money. If I don't get it, then why would I trust an institution which is not that? Second thing which I just wanted to sort of add to what Srini was saying was this whole concept of customer champion. I saw this in few institutions where they have very dedicated team and no product and nothing could happen unless they sign off. So their thinking is to think from the customer point of view, which I thought was very fascinating, because they were like, if you have not done anything for this, my customer, they were like my customer. If any team, any product does anything, they would not like it, because it doesn't work with the customer. So they would have this very high yardstick that how this will, anything which you are launching would help the customer, because I think that orientation is important, because I don't want my company to be offering product which does not work. So I think in some ways, if you can have, sort of dedicated teams who can really go deeper into what the product design is and how it sort of help, I think might help. The third thing which I think regulation has done is, and this is something which Srini talked about, is really, is there a back available? Is there a resort available? I think this is, even our survey shows customers struggle a lot, because when things go wrong, they want to talk to people, they want to, get their grievances heard and see that problem. And I think there's no secret about it that this is a problem for them. So for example, this new thing which, fintech digital lending guidelines have done, where there is a concept of cooling off period. While it might look operationally for a lot of lenders very overwhelming, that, it would create further friction and people might drop off and so on. But think about it, it will create such a powerful incentive for customers to actually take a loan, because they know that if they have doubts about it, after 2 days they can exit the thing. And when we were having this conversation, I think, the way e-commerce has worked in this country is precisely by giving this small comfort to the customer that, okay, you don't like it, just return it. Is something which is very powerful for eventually for all of us to trust those, buy those products. If we can replicate some of those successes, which I think e-commerce has done in India in terms of building those trust, whether it's a cooling off period or giving this assurance that if something goes off, there's a process to restructure. People, we have to be realistic about 80% of the India, which remains very, very vulnerable to these shocks. And it's very elitist to say that, they have to pay every time. They won't be able to pay. We have to take it as is. And therefore, it's important to have those mechanism to give them that comfort that if something goes wrong, there is a way to restructure the product or something like that. I think these are the important thing, and as we navigate our customer, I think we have to listen what the problems are they are facing and tackle them.
So Nishant, I know a lot of conversation has been about ex post. Once the customer has decided to choose a product, what is their journey, what are their hurdles? But when we were talking, there was this notion of confidence versus trust, right? There's a hurdle to be crossed even to get the customer on board, perhaps it still exists. So what's your notion, your distinction between confidence and trust was something I was personally interested in. And what are the measures that speak to each of them? How do you increase confidence? How do you increase trust?
Okay, so I think before I jump to that question, let me tell you a story. I was in Sundargarh district of Odisha, and I was talking to one of the Asha Didi who provides first aid or PSC, before PSC services, right? Primary health care. And this was a time when there was a lot of miscommunication about the COVID, this whole vaccine thing. And government actually deployed the Asha Didi workers to sort of mitigate those miscommunication. So when I asked her why she was able to do it, because she said, sir, if I tell in this village that this is not a mango tree but an apple tree, people will believe. Okay. Why this has happened? Because he has built that social trust, right? And she has rendered some very quality services in that village. Because of that, villagers have the trust. And in India, we somehow sort of always look down upon what we have in plenty, which is the social trust, right? Even before the digital trust, we have social trust, which is there maybe because of certain compulsions. We share a lot of things because of our economic situations. And some are by designs, the kind of festivities, the kind of family values that we have. And I think if we have to really sort of leverage or build the digital trust, right? First off, somehow we will have to leverage the social trust first, right? What I want to sort of convey here is that even before people use a new financial product or a financial systems, the trust is implicit, okay? So when you go and talk to a low and moderate income segment, that, sir, this is a very good product for you, he will look at the product second. First he will look whether the person or the channel, he has the trust or not, right? And I think this case is in point where the distribution becomes very key. The phygital approach becomes the success stories for anyone who wants to deal with the low and moderate income segments. If you will see, even with all the digital lenders, they have not been able to penetrate maybe the top 25 cities in India. And the growth of whatever 8 million, 10 million customer base, they have been able to do it only in the top 25 cities. Beyond that, you have to go towards with the phygital approach, not because they can't reach it, but because it is difficult to build a standalone trust without leveraging the social factors, right? And coming back to the difference between trust and confidence, and I'll go back to the story of that Asha Didi. So we were interacting with this Asha Didi to see if she would like to come on board and provide Lakshya solutions in the villages, micro insurance and micro savings, because she has the reach and we wanted to leverage that. The confidence of the villagers will come on Asha Didi for the financial products if she is able to deliver what she is telling or what we are providing day in, day out. That will build the confidence in order to use the financial products via that Asha Didi. But the first time uses of the financial products or the channels, the trust is implicit. You can't buy the trust of the users simply because they don't have the surplus to experiment, okay? They are buying your product. In case of lending, maybe it's a little different story because this is more of a pull, more of a requirement. But for other financial products, they are associating with you because there is an implicit trust either on the channel or the person.
Yeah, that also reminds me of two research studies that we've recently encountered. One is from CUTS, the Customer Unity and Trust Society. And what their work showed, I'm forgetting the numbers, but I'm sure it's somewhere on their website. But the small experiment basically showed that appointing community women champions led to an uptake in digital payments. And the whole idea was that the social collateral that Nishant has been pointing us to, that it comes to bear in very tightly knit social communities where people know that there is a person they can go to. The other thing on a similar format that we are seeing currently in our study of UPI users is also that in a product range where product is almost undifferentiated, all UPI providers provide almost the same service, what makes a person uptake a particular service as opposed to the others. And we've found that social proof really plays an important role. So if people in their network are using a particular service, customers or first-time users would actually kind of gravitate towards that. So I think there is a component of social proof, there is a component of social collateral, which not only digital, according to me, digital providers need to mimic, but also learn from, because these social champions are really institutions of themselves who have consistently upheld the people's expectations, like Nishant was referring. So it's not just how can we in form or content mimic what social champions are doing, but really provide consistently the same level of experience, the same level of personalized experience that a social champion is able to. Quickly, if I can come to Srinivas. Srinivas, in India, frauds in UPI is a theme. And we're going to kind of surface that when we play Rafe's conversations. But are you seeing digital frauds or digital abuses in other parts of the world? Not just those related to data, but even perhaps financial. And what are some measures that perhaps other regulators are contemplating or other parts of the world are experimenting with?
Yeah, that's a great question. I think so. With the growth of digital consumption, I think it leads to a growth in digital fraud as well. So obviously, it's something which kind of, with all the opportunities that are created, it also creates risks, and there are what we call as bad actors who are trying to use that loophole to kind of go and find ways. So absolutely, digital fraud is an area of concern across the world. We've seen lots of statistics about online consumers who experience a digital fraud are unlikely to go back in certain point in time. I think you referred to the study. Similarly, we see that in for example, in Latin America, I think the rate of fraud is one of the highest in the world. And I think some of it is also stems from, there's a lot of like sharing of information, and I think that kind of leads to people not knowing what they are sharing, and that results into fraud. So that is the problem, but I think in terms of how we should be thinking about it is to look at what can be done to safeguard the customer's interest, and then also think about balancing that with what the customer intent is supposedly. So I think if you look at things like GDPR or strong customer authentication in Europe and some of the other countries which have followed, I think the intent is not to make every transaction hard to complete. The question is, how are you using risk models to challenge transactions which may be fraudulent? So I think what we observe is there should be investment both on internal processes that companies have to kind of do detection, prevention, and then kind of having a closed loop mechanism to make sure it doesn't happen again. So it's, you talk about machine learning and all the technologies that you can put into place. So we see one push to where there needs to be more technology solutions. Secondly, we see the regulators also coming up with authentication mechanisms that have the intent of preserving customer trust, but at the same time, you need to balance that app with how many clicks that the customer have to do, what information do they need to provide. And then finally, I think there's a responsibility for the regulator, the businesses, the associations to kind of come up with framework that allows improvement of the technology if it's going to solve the problem, but also in terms of like, what are some practices that can be shared and that can be general purpose that can be applied so everyone can learn from it.
Sure. I think we're running out of time, but one segment that I do want to get in is from someone called Rafe Mazer. Rafe heads the customer protection wing at the Innovations for Poverty Action Lab, and he's been at the helm of customer protection for several years now. Rafe is unfortunately able to join us real time. We do have a clipping of his which tells us about what are some interesting experiments that are going on to surface frauds, fraudulent apps on app stores, and what are some things that stakeholders such as Play Stores can do about it. Can I request the organizers to play the clip, please? So Rafe, thanks very much for this recorded conversation. My apologies for not being able to get you onto the panel in real time, but we really did want to get your thoughts on what are the things that we need to start doing differently, or we need to start doing actually to kind of address this digital spread of frauds.
So I want to highlight just 3 things that we've been working on. The first is, you mentioned, fraudulent, fintech apps. Working with Mrinal Mishra and Jonathan Fu of the University of Zurich, we tested a model that could use machine learning to predict the probability that an app on the App Store was fraudulent. And it looks at things like reviews, it looks at, but it also looks at other metadata, like, is this developer has done previous apps that were put on the market and quickly removed, because you see that a lot, repeat fraudsters. They launch an app, they defraud people, it gets bad reviews, they pull it and do another one. They also look at, is it a company or just a Gmail address, things like that. And their model was actually highly successful in predicting what are most likely fraudulent apps. And so you think about, in India, a lot of important steps have been taken to try and clean up the app stores. But how do you do that on a continuous basis without overwhelming your supervisory staff? And so where we have these solutions where it can give you, instead of a list of 1,000 apps, it says, here's 100 apps that we think may be fraudulent. And then you, of course, have to query them individually. You don't want to, mark it as fraudulent without making sure that maybe the machine made an error. But this is how we can sort of do a better job of I guess it's narrowing the kind of initial universe that we have to look at through the assistance of machines. We also are doing a lot of work looking at social media data, because it's become a really important outlet for consumers to express concerns they have. And it also happens in near real time. So we can, with these models we've developed where we scrape and do keyword analysis in social media, you can track trends in problematic issues with different providers as they sort of surge. And you can even set up alert systems, to be notified when a particular topic, like fraud or SIM swap or something like that is trending in your market. And then you can look at the raw social media data and see, see what is the issue, and then engage the providers. And that has the benefit of being more sort of real time than the official complaints data, which often, is reported on a monthly basis. But I don't want to say stop using complaints data. That's the third example. We've done a lot of work, particularly in Uganda and in Nigeria, with regulators where we're receiving the actual customer care records from providers. And it has, the product, the day, the time of day, the location, the issue, the amount of money in dispute, and the status, resolved, unresolved, things like that. And we've started to ask them to add in also demographic variables. And what this does is it really gives you a rich snapshot to contrast with things like surveys to see, of the consumers who experience problems, are they all equally using formal redress channels? And one of the things we find is women are underrepresented in complaints data. And I think that that's an issue. We've funded some exploratory work in India, in fact, to look at gender issues and gender barriers in access and use of redress systems in digital financial services. So that can really, it's really basic analysis, but if you have the good data, you can quickly identify things like a gender bias, and you can figure out, okay, what is not working about redress for 51% of the population. And we can also go a step further, and we run predictive modeling, where we look at, okay, the past data, all the consumers who called in with fraud problems, is there anything particularly unique about them versus consumers who call in for any other issue? And in Uganda, one of the things we noticed that was particularly powerful was the time of the month. So middle of the month and end of the month is when you get more fraud calls. And we think fraudsters may be targeting periods of the month when people get paid.
Yeah. And do you also see other stakeholders playing a role in this?
So ideally, app stores would do more about this. So I'd love it, maybe if there are people who work for those platforms that are interested in doing more to partner with governments or with industry associations to identify fraud issues and other consumer protection issues, that would be wonderful. I mean, I think, for example, on one of the app stores, there's a prohibition against loans that are shorter than 60-day in tenor, and I just don't think that's being enforced from what we've checked.
But before we part and I turn to the other panelists, any final thoughts on what are the priorities for customer protection in digital finance?
Fraud is emerging as an important issue because of digitization. It's not like fraud didn't exist. It's just the speed and scale potential that digitization allows for. So I think more than ever, that's important. And the other one is the kind of ever-present consumer protection issue, which is consumer debt. And again, it's not, I mean, as long as we've been humans, we've been living beyond our means when we can, right? I mean, it's sort of human nature. So it's not that digital is to blame, but it again is the scale, the speed of scale. Like I've done a lot of work in Kenya where we have had really concerning issues with the digital credit market saturation there and some of the conduct. And you can see it in the national surveys of financial health, a significant decline in overall financial health in Kenya across the last 2 rounds of FinAccess surveys. So those would be the 2 that I really think we need to invest time in on consumer protection. And then I think we also need to look at the data rights space, which I know it gets a lot of discussion in India. And that's both for consumer protection and for competition purposes.
Okay, I think we're up to time. I'll just give a minute each, and I literally mean a minute each, to think about what are the next steps for building customer trust. Sugandh, and SRO seems imminent. What is it that the SRO can do?
Yeah, so I'll just pick from where gentleman left. I think the gorilla is this fake app issues in India, right? We all read about it for past 2 years. We have been working on this, but you know, it's a monster which creates itself, it seems. You bring out 200 apps and tomorrow perhaps 250 apps are added. So if I have to take one priority, I think that is something which is utmost priority to build the trust, because the biggest problem customer face is how to identify that app that I'm going to is a trustworthy or not. So there has to be some very commonsensical stamp of approval for the customer to know that, okay, this is the trustworthy app, and let trustworthy app then compete on the product, not on these things. So I think that is something which is very important. Thank you.
I would just say that there should be a partnership between regulators, businesses, and institutions to kind of figure out what is the best offer for the customer and bring the economies of scale and create an environment that will be co-investment in digital infrastructure. Because I think that will allow us to have like a level playing field where everyone can have this access to the same information. And then again, as Sugandh said, come up with the best product. I think that will kind of spur more competition and innovation.
I think, I'm also consulting a few startups which work in the Bharat segment. And one of the key areas, anyone who is working in the insurance and savings field, that they have to invest in the steep learning curve for the customers, right? And it's like everyone they go, and it's not the work of a for-profit entity, so as to say, to invest into that, right? They are there to serve the users, right? But even the basic construct of the financial products, it becomes very difficult to penetrate into such a market. So I think something like UPI, what UPI has actually done, it has created a common payment infra on which everyone can sort of jump in. Something of that sort can be done on the product literacy. I'm not calling it a financial literacy, because then it becomes too theoretical, but something of a product literacy where people understand the basics, construct, what they will avail, what are the benefits, what are the constraints, what are the limitations, especially on the savings and insurance side. That gives us an opportunity to sort of, again, give it a not X, but 10X or 100X growth and go beyond this digital journey, beyond maybe payment and lending.
Quickly to wrap up, equipping customers with means so that they can distinguish between fraudulent and genuine players. Providing just-in-time product literacy so that customers are illuminated about the product they're getting into and what to expect of it. Having a grievance redressal mechanism that provides just-in-time great grievance redress, but also provides a method or a two-way communication or feedback, like Nishant called it, throughout the customer journey so that we can keep a pulse on what the customers are feeling. That's a wrap from us. Thank you so much.
Thank you.
Thank you.